But as we do that, here's some market opinion coming in from Rupal Agarwal of Bernstein. We'll be back with more market action.
We still remain a little bit more cautious. I think the macro risk still persists, and I sort of agree. The Indian market have been relatively much more resilient. And there have been some external factors to it, along with, of course, the domestic story being strong. But I think that the China, not doing well, and a lot of investors not being comfortable, adding more China exposure has, in some sense, helped this reversal that we've seen in FIs coming back. So I think there have been some external factors. From here on, we are still, remaining more cautious, I would say. There are, of course, signs of some breather coming to the market in the form of if, inflation starts coming down significantly. Inflation still remains very high. Fed's resolve to bring down inflation remains very high. To me, it looks unlikely that, markets are going to rally very strongly. Having said that, if you look at any of the previous bear markets, we've actually seen some of the sharpest and the strongest and the longest bear market rallies. If, whenever we've seen the bear markets being very long or more persistent. So we could potentially, see both ways volatility, increasing. And that's what we expect in US. So, as I said, we are still remaining more cautious than very bullish in the shorter term because the macro risks are still out there. Markets will always see this very strong bear market rallies or in between rallies before we start seeing, another leg down. So I do think that, there could be another downside which could, beat the previous lows because of a risk of a recession still out there, the risk of a very aggressive Fed, which again, means yields moving higher, dollar is still quite high. So a lot of these macro risks, I think, are still there, which I do think that markets are not completely pricing in.